Good morning, everyone. It's 10 a.m. on Tuesday, June 30th, 2020, and this is 10 on Tuesdays. For today's episode, I'm joined by special guest Craig Johnson. He's the Executive Director of the Streamlined Sales Tax Governing Board. And we're going to be talking about one of the most requested topics, and that's multi-state tax. I'm Holly Hoffman, founding partner and CEO of the Sales and Income Tax Advisory Network. Prior to creating my company, I worked for the Wisconsin Department of Revenue as an auditor, speaker, and sales tax specialist. My passion is really to help provide sales tax education and support to tax professionals, businesses, and associations with the goal of building a network of empowered taxpayers. For more information, visit my website, salesandincomeTax.com. So thank you for joining my web chats, 10 on Tuesdays, every Tuesday from 10 to 10:30 a.m. You can check out previous episodes on my 10 on Tuesday channel. To find my channel, go to salesandincomeTax.com, look for the 10 on Tuesdays logo. You can click the logo to register or click on watch previous episodes to access the 10 on Tuesdays channel. So now let me formally introduce my guest for today, Craig Johnson, Executive Director of Streamlined Sales Tax Governing Board. Craig also previously worked for the Wisconsin Department of Revenue. And in fact, I had the honor of being able to learn from his department-wide technical tax law training, and I utilized much of his research he left behind when he took the position with Streamlined Tax. So Craig, thank you for joining us today.
Hey, thank you, Holly, for inviting me to participate. I'm glad to be here and glad to be talking to a former colleague.
Awesome. I don't want to take up much of your time today because I know you have a lot to talk about and a lot of information to share about your organization and laying out the basics of Nexus and the impact of Wayfair court decision. So for folks listening, I just want to mention, if we go over the half hour and you need to sign off, just remember that you can always go to the 10 on Tuesdays channel to rewatch this episode. And with that, Craig, I'm going to turn things over to you. Just double checking that you can switch slides yet. Yes. Perfect.
There we go. Looks like I was able to do that, so that's good. So again, thanks, Holly. Again, I appreciate you inviting me to participate. And you know, we're at a really strange time in our world right now with the whole COVID-19 pandemic. You know, and it's really thrown a lot of businesses into a frenzy. You know, trying to figure out, you know, how do you keep your doors open? How do you keep your employees safe and healthy and things like that? And sales tax is, you know, it's probably really one of the last things businesses really have time to or want to be worrying about right now. And I think that people will find that participating in our program, what we've developed through Streamlined Sales Tax, along with one of our CSPs, is really an easy way and a great way to help alleviate some of those concerns and things like that. So as we go through this stuff today, you know, I know Holly will be jumping in and have a little conversation about some of the topics, but I want to talk a little bit about Streamlined Sales Tax, the whole Wayfair decision, and remote sellers, and really help you understand that we are here to help. We are here to try to provide a resource to people when it comes to remote sales tax collection and sales tax administration throughout the country. So as we move forward to the first slide, let's talk about, you know, what is Streamlined Sales Tax. You know, the best way really to describe, you know, Streamlined Sales Tax, or SST, as many people refer to it as. I mean, it's an effort that was created by state and local governments. It really resulted in a partnership with the business community, and it's aimed at making sales tax administration, and in particular, multi-state sales tax administration, easier. You know, sales tax collections, I mean, it relies heavily on voluntary compliance by sellers as well as the purchasers. And obviously, the more difficult the laws are to understand and apply, the lower the voluntary compliance is going to be. You know, and I think states, you know, they really started to understand this, and they wanted to find ways to make it easier. With respect to Streamlined Sales Tax and the input that we get from the business community, and when this project all started, some of you are maybe aware of this, that Wisconsin, you know, in particular, Diane Hart, she was one of the early leaders of this project and really helped shape it into what it's become, and into the partnership that we've developed with the business community. You know, I'm not so sure that when we started this project, people thought that we'd still be around today. You know, it could have been one of those things that, okay, it happens for a little while and then it goes away. But as we walk through what's happened recently in the sales tax arena, I think, and I'm hopeful that the listeners are really going to take a close look at what Streamline's doing to help make sales tax administration easier and take advantage of what we have to offer. When you look at who we are and what we've got and who our members are, the map that's up on your screen, all those light blue states, those are all our full member states. We have 23 full member states, which means they've enacted all their provisions and they're in compliance with the requirements of the Streamlined Sales and Use Tax Agreement. We have one associate member state, which is the state of Tennessee. There are 5 states, obviously many of you know, that no sales tax in them, but all of the other states, with the exception of Colorado, have participated with the organization in some way, shape, or form over the years. Initially, I think that there were 44 of the 45 states that were participating in all the project meetings. And then as the agreement got developed and got finalized, obviously some states continue to be involved while other states have dropped off. So if we talk about why we do it, why did Streamline come about? We were really looking at an effort that centered around finding a solution to the complexities in the state law, sales tax laws and systems, that resulted in the Supreme Court holding in both Quill versus North Dakota and Bellis Hess versus Illinois that said, look, due to all these undue burdens, the difficulties, states could only require businesses with a physical presence to collect or remit their tax. Now, keep in mind that obviously these decisions were back from 1967 and 1992, which is well before the internet and the growth in e-commerce, and really well before today's technological advancements. And local merchants started realizing people were buying more and more things online. Competitors didn't have to charge sales tax. They did. They wanted to level that playing field. And at the same time, states, with the e-commerce growing, and granted, states have both a sales tax and a use tax that purchasers are supposed to be paying. But the reality is most people weren't paying their use tax. So states were actually losing a lot of revenue as e-commerce continued to grow. And I know, Holly, you deal a lot with that with your multi-state clients that are involved in e-commerce and remote sales.
Right. It's almost everyone does e-commerce nowadays. It's very few people who don't.
Sure. And really, it's people that, maybe businesses didn't plan on going down the e-commerce path, but to remain competitive and stay in business today, just about everybody is involved in that now. When you look at what the goals were when Streamline started, we were founded on, and really we continue to operate with these 4 main goals in mind. Simplify the laws, where possible, find it easy. If something can't be made simpler, at least make it uniform. I mean, uniformity in and of itself is a type of simplification. And keep in mind state and local government sovereignty. Trying to find the right balance between simplification, uniformity, and state sovereignty, it's difficult. I think Streamline, with input from the business community and the state legislators that participate with us, we've done really a great job in that area. Now, as we develop the positions and the simplifications and the uniformity requirements, did everyone get everything they wanted? Absolutely not. But but I think we ended up with a product that was workable and more importantly, politically acceptable. And then obviously the 4th goal is using technology. I mean, technology is out there, technology continues to evolve, and it's important that we take every advantage of that we can. And after I'm going to say a period of time, and it took a few years of meetings, discussions, negotiations with the business community to really develop what's now known as, the Streamlined Sales and Use Tax Agreement, or the SSUTA. But it really was a cooperative effort. Everyone wanted to find solutions. And, the SSUTA contains a whole host of simplification, uniformity requirements that states have to enact in order to join. And I know we'll talk a little bit about some of those in a few minutes. But the simplification and uniformity provisions that are contained in the agreement, and it's only about 150 or so pages, and so for you some light reading, that's something that's readily available online on our website. But we're really trying to help ensure all businesses operate in a sales tax environment that's fair. Ideally, we take sales tax completely out of a purchasing decision. In other words, don't ever think about sales tax when you're deciding whether you should or should not buy from one supplier versus another. We want everybody to really, from a sales tax perspective, to compete on a level playing field. And something else that I think is important to remember with the Streamlined Sales and Use Tax Agreement in all our member states, that every one of the provisions that's contained in that agreement applies equally to in-state and remote sellers. So all the definitions, all the sourcing rules, everything applies equally. The only exception is the use of certified service providers, where when we talk about that, you'll find that if you're a remote seller, those can be paid for by you, by the states, as opposed to you having to pay for those services. But otherwise, everything applies to everybody equally. And I think that's something that gets missed when people are talking a lot about Streamlined and the Streamlined member states. When we talk about the Business Advisory Council, this is really the voice of the business community members. I mean, this is the state associations, this is small mom and pop businesses, this is large multi-state, multinational businesses that are members of the Business Advisory Council. And it's an extremely important part of our organization, because we as states, I'm going to say we know and understand our own state's laws, but I don't think we always fully appreciate the difficulties that businesses face when they're looking at multi-state. You know, you're operating in 15 different states. You don't just need to know the laws of one state. You need to know all 15 states' laws, and every state expects you to comply with every provision of their law. So you need to know, you know, all the nuances. These multi-state businesses really give us some great insight into the areas and the provisions in different states' laws that create them difficulties. And again, Holly, I'm sure that you see that same thing with your clients that are operating in multiple states, some of the difficulties they face.
Right, and it's great. I know, just going back to your map at the beginning, that if our Wisconsin businesses look, almost all the states around us in the center of the US, other than Illinois below us, but we're surrounded by members of the SSUTA agreement. And it just makes it so much easier, because when you're talking about something, one of the big things that SSUTA does is makes the definitions universal. So when you talk about candy, candy means the same thing in all those SSUTA states. So that's so helpful. It doesn't mean the tax treatment's always the same for everything. There are some toggles, but it just helps simplify in that form, in that sense, for businesses.
Yeah, and you know, and you indicate that about, you know, difference in taxability, Holly, and that's a great point, because one of the things that Streamlined does not do, and I will stress this, we do not tell a state what to tax or what to exempt. Every state's legislature makes up their own decision on what they tax and what they don't tax. But as Holly indicated, candy is a great example. Some states tax it, some states don't. But if you know that what's candy in state A is also candy in states B, C, D, and E, and it means the exact same thing, makes it a lot easier for you to program your systems when you're determining taxability, and all you do is turn the tax flag on or off for any product that falls within the candy definition.
Right.
You know, some of the other features that are in the Streamlined Sales and Use Tax Agreement, and again, there's a whole host of them, so this is just a few of them, but these are some of the things that I believe have been very important for, again, multi-state businesses in particular, to be able to comply. And it's state level administration of local sales and use taxes. You don't want to have to file a return with every local jurisdiction. You don't want to have to register with every local jurisdiction. So we require our member states, for any taxes that remote sellers are required to collect under the Streamlined Sales and Use Tax Agreement, we require them to all be administered by a single state level entity. It could be the Department of Revenue, and that's what it is in all the states right now, but you could have a third party entity that the state agrees to have administer all of those for them. State and local tax bases, you know, for Wisconsin, we've been very fortunate, you know, that the state and local tax bases for our state tax and our county taxes and our baseball stadium tax or football stadium tax, you know, those have been the same. And, you know, it's almost hard, if you think about it, that's all you've known. to realize that in other states, what's subject to state tax may or may not be subject to local tax, and vice versa. It's just the extreme difficulties and burdens that it puts on businesses. So that's one of the requirements that we have. Something else that I want to tell a little bit is our central registration system. You know, it's a simple application online system that you can complete, and you can register for 24 states very quickly, very easily. You can pick and choose which of our member states you want to register for. And if you need to add a state later on, it's simply a matter of going back into your registration in our system and clicking on that state's name to add them to your list of registrants. Once you do that and you hit the submit button, you're registered in that state, and our system talks to the state system and provides all the information that they need. If a state wants more information than our system asks for, the state is required then to reach back out to the sellers and say, hey, we also need this, this, and this. You're registered because all of our member states agree that once you submit that registration through us, you are registered and are able to collect and start operating your business in that state. But if there's more information they want, they're responsible for reaching out to you to get that additional information.
I just want to clarify something, Craig. Anyone can use your registration, right? You don't have to pay to do that. They can just go to the Streamlined website and use your registration.
That's absolutely correct. And it is our system, there is no cost, there is no charge. You literally click on a register now button and it'll take you right into the registration system, and you can get set up. I think that if you go through the whole process, it might take you 10 or 15 minutes. And again, we're not asking for everything, including everybody's firstborn and things like that some of the states, it seemed like, ask for. We don't need all of the officer information and driver's license numbers, none of that. We basically want the information, and the states have agreed that we just need the information that identifies you. It's got your, legal name and ID number, such as an FEIN or an SSN, depending on how your entity is set up. So it really is it's a simple process, and we get a lot of compliments on it. My only wish is that every state, not just our member states, would participate. And we are certainly trying to get non-member states to participate with us to make it even easier for businesses in the long run. What you see on the screen are just a few more of the simplifications that are contained, or some of the features that are contained within the agreement. And just two of these that I really want to mention are the simplified exemption administration. This is extremely important, particularly to remote sellers. Wisconsin, before they joined Streamlined, there was a good faith provision with respect to their exemption certificates, and you had to apply a good faith standard before you could accept a certificate. So you really needed to know or ask yourself, does this purchaser really qualify for this exemption? Under the Streamlined agreement, when they joined, that provision went away. And it basically says, look, if they provide information to you, a complete exemption certificate to you, and they claim exemption, and you didn't encourage them to claim something incorrect, there's no fraud and things like that involved, you as a seller are off the hook. And if you think about that as a remote seller, and you're selling into any one of our 24 member states and you're shipping your product there, you don't have to really figure out, does that purchaser qualify for exemption in that state? When the good faith provision is in there, it could have been, I'm going to say that ugly, that much detail, that much information you would have needed to know.
Yeah, that's a huge, and I keep talking about that in my most recent June newsletter. I talked about exemption certificates and the importance of the 90 days for the seller to be relieved of liability. So very important. Sure.
And then the other thing I want to touch on here, and we'll talk a little bit in more detail on, is the certified service providers. This is probably one of the best things that Streamlined developed and that we've done to specifically help remove burdens from remote sellers. And when I tell and talk about certified service providers and who they are, or what a CSP is, what I tell people is to think about what you've been doing with respect to your payroll taxes from probably many, many years for many businesses. You outsource it completely. This and the certified service provider program is an opportunity for you to outsource all of your sales and use tax compliance obligations. And again, you're comfortable in many cases doing it with your payroll, but you haven't gotten that that far yet with sales and use tax. So that's really what the CSPs are and have available to you through a CSP, or the services available through a CSP. Now, before a company becomes a certified service provider, they've developed what we call a certified automated system. This is a system, or a tax engine as we refer to it as in many cases, that at the time of the sale, it integrates with your order entry system, your shopping cart, determines taxability, what the rates are, and the amount of tax due to each of the jurisdictions. But the other things that the CSP handles that people I don't think are aware of is they actually are the ones then that will generate and file your sales and use tax return for you. They make the required remittances to each of the jurisdictions. You don't have to write checks or do electronic transfers to each one of the states. You make one transfer to the CSP. The CSP is the one that's responsible for splitting that out and setting that out to all the other states. There's also a number of other requirements that the certified service providers have to meet, like from an audit perspective, for example. They have to be able to maintain all of the data from all the transactions they process for you. So if the states ever want to go back and look at that, that audit trail is there. So there are other requirements they have to meet. I will tell you, it's a very rigorous process for CSPs to go through there. We've had a number of entities that have wanted to become CSPs, and by the time we go through and do our due diligence with them, we determine that they are not the type of entity that would be eligible or be able to provide the CSP level of services that our organization expects for our member states. Now, if you're a seller that uses a CSP, again, they will take care of all the tax calculations, all the return preparation, return filing. They do all of that information for you. And they provide those services if you're a remote seller in a state. So let's say you are located in Minnesota and you're making sales into Wisconsin, both member states of the Streamlined Sales and Use Tax Agreement, and you sign up with a certified service provider. And if you do not have, typically it's physical presence in a state. So if you don't have physical presence in Wisconsin and you're having your products delivered into Wisconsin, that service by those CSPs can be provided at no cost to you as the seller. The way the CSPs are compensated is our states allow them to keep a percentage of the tax that they calculate, collect, and remit to the member states. So that's how they in effect get their compensation. Now, you as a seller, you have certain requirements or certain responsibilities with respect to that CSP. Obviously, you have to let them know what your products are. You have to give them a good description of them. Many of them have you do what we call mapping the product. They've got certified product categories like clothing. If you're selling a shirt, you need to make sure it gets mapped to the clothing category, because then they know that clothing is taxable or exempt, but they take care of making those tax determinations, not you. You just categorize your product. So if you haven't heard of these folks, I would certainly encourage you to check them out on our website, reach out to a couple of them, talk to them about what you have, the way your transactions work. I think, Holly, you're working with some of them or are looking to partner with some of them as well.
Yep, right now I'm working with Avalara, but it really depends on the customer or my client, of their system and size of the company, of which CSP fits them best, but great opportunity.
Yeah, and we've got, we have actually 7 companies that are certified as CSPs. And we will continue to get inquiries, as I indicated, by sellers or by companies that would like to expand or become a CSP for us. And, from my perspective, the more CSPs we have, the more options that businesses have, the more options that practitioners and advocates such as Holly have to partner with them to make sure that they're getting their clients the best services or providing them the best option available. Something else that I think is important with respect to CSPs and using a CSP is that very last bullet. The CSP assumes responsibility for the audits. Any audits that our member states do with respect to a company that's using a certified service provider and that is a remote seller, or we term a volunteer seller in a state, the CSP is the one that we contact for the audit. We handle the audits through them. Now, the CSP may come back to you as a seller and say, hey, we need some additional information, we need some background, we need some copies of invoices, things like that. but the CSP is the one that assumes responsibility. And then any potential liability we would hold the CSP responsible for. I would encourage you to take a look at any contracts that you enter into with the CSP to see what liability you ultimately could be responsible for in the contract between you and the CSP. Obviously, if the CSP makes a mistake, if their system calculates tax incorrectly and the system's been certified incorrectly in effect by the state, there is liability relief. You do not take on that liability. In fact, the states give the CSPs liability relief in that case as well. So there are some significant benefits to using the CSP. So I would certainly encourage you to take a look at that. So Holly, should we talk about the Wayfair decision a little bit?
Yeah, let's do it.
Okay. So, when we talk about the Wayfair decision, and, and I always say June 21st, 2018, that's probably a day in my life that I will never forget. It's probably also the day of one of the most significant sales tax changes that are going to take place in my entire sales tax career, possibly my entire lifetime. When you think about the change that happened because of Wayfair, this is a big decision, and it probably affects every remote seller in one way or another. When you look at the decision, basically what the decision said is, look, you don't have to have a physical presence in a state any longer before you can be required to collect and remit their tax. But now if you have what's referred to as an economic presence, or under the decision itself, the language in the court case itself was the economic and virtual presence test. But in those cases, then you may be required to collect and remit that state's tax. So if you think about that, that reversed nearly 50 years of people only thinking about physical presence when it came to whether or not you were required to collect and remit sales tax. You had a lot of control over where you physically did or didn't go. And when you think of economic nexus, you have a lot less control over where you do or don't have economic nexus if you really want to grow your business. And that is because of the trend and the increase in remote commerce or in e-commerce. And it's also important, and Holly and I have talked about this in the past, it's important to understand that this decision did not replace the physical presence test or the physical presence requirement, but instead it added to it. So now you have nexus if you have physical presence, and you can also have nexus if you don't have physical presence, but you have economic presence. So you've got to be thinking about both physical and economic presence when you're trying to determine and decide where do you have tax obligations and where don't you have tax obligations. And I think that there's still probably thousands of businesses that are operating today that have economic presence in a state, and they don't even realize that they need to be calculating, collecting, and remitting the tax for those states. And those are the businesses that we, from a Streamlined perspective, we want to get to them. We really want to help them. We don't want, a state going in there and telling them, oh, by the way, for the last 4 years, you should have been collecting our tax and you didn't, and here's the bill. We want to make sure those people are aware of it so they can make, from a business perspective, they can make the best business decisions possible. And again, Holly, I know that's something that you, I think, preach as well to your clients about making it a business decision and making sure you understand what the liabilities are.
Absolutely. And just being aware, just being caught off guard, you can't imagine how much 4 years adds up for tax. So it's very important.
Sure. And when you look at the decision itself, I want to make it very clear. The Supreme Court did not say South Dakota's law passes constitutional muster. What they said was that the threshold that South Dakota put in place, and they used at 200 transactions or $100,000 in sales, that was sufficient for creating nexus with the state, because in the court's term, they said the seller availed itself of the substantial privilege of carrying on business in South Dakota. So that's what the decision said. The court, in its opinion, went on and said that it's possible that some other principle in the court's Commerce Clause might invalidate South Dakota's law. And that principle likely was imposing an undue burden or discrimination on interstate commerce. And the case was actually remanded back to the state of South Dakota with respect to that issue. and the parties ultimately settled, so that those issues were not litigated. Now, when the opinion came out and they talked about the undue burdens and the discrimination in interstate commerce, they did point out three things in South Dakota's law that they believed, were designed to prevent these things from happening. And that was, the transactional safe harbor, the 200 transactions, $100,000 in sales. The fact that South Dakota wasn't going to apply its law retroactively. And obviously my favorite, they specifically pointed out their membership in the Streamlined Sales and Use Tax Agreement. And when they talked about the membership in the agreement, they went on to specifically identify some of the things that Streamline requires its member states to do, that South Dakota did when they joined Streamline, and things like that. And that list is on and this came right out of the opinion, that is on the screen right now. And I think one of the most interesting things about this list is the fifth bullet down, other uniform rules. And the thing that I look at with that is I say, did they really mean the entire agreement? How much of that did they mean? We don't know. We don't have an answer to that question. But obviously our member states have adopted all those uniform rules. So whether they were meant to include all of them or just a few of them and just didn't want to list more of them, but those were specifically identified in the agreement itself. And when you go, and I'm just going to jump back to this previous slide just for a second. When you look at the three bullets that were issued, or the 3 points that the Supreme Court noted, and I think about states that are not members of the Streamlined Sales and Use Tax Agreement, and I think Holly's heard me say this before. It reminds me of an old Meatloaf song called 2 out of 3 Ain't Bad. And when you look at the states that are not members of Streamline have done, they put in the thresholds, 200 transactions, $100,000, or some threshold like that. They've said we're not going to apply it retroactively, but they're not members of Streamline. And therefore, I still say, and I know I've been quoted in a few different places as saying, I still think that that's potentially where the next piece of litigation on this issue is going to be the undue burden, and whether or not a state is imposing an undue burden on sellers that they're trying to say, you have to collect and remit our tax because you have economic nexus. So that's something that I think, again, that's something that's still out there. It's something that our member states take very seriously, and I think want to make sure that they continue to comply with Streamline. They want to continue to look for additional simplification and uniformity. They want to make sure that they don't impose any undue burdens. And I think that area is also the one area that if Congress is going to get involved in this issue and set some parameters, some sidebars up, which is, I will tell you that for probably 10 plus years, we were going to Congress and saying, we need you to get involved. We need you to set some parameters. We need you to put forth the limitations or the requirements that states have to meet. And we had folks out there saying, no, Congress doesn't have to get involved, blah, blah, blah. And the bottom line was they really didn't want remote sellers to have to collect the tax. So then the Wayfair decision came out, and now some of the groups that were saying we don't want Congress to get involved are now saying, hey, Congress, we need to get you involved to set the parameters. And now as member states and as our organization is set up, we're saying to Congress, we don't want you to get involved at this point. Let the states show that they can administer this in a reasonable manner. And again, we certainly are encouraging states that are not members of Streamline to join with us. As business members or business community members, I would encourage you to reach out to states that are not members and say, you need to join. We've had a number of sellers that have come to us and said, we're collecting the tax in all your member states because of the CSP services, because of the simplification, because of the uniformity. But quite frankly, we're not going to collect in those other states, not until they make it easier for us. So we know that they're missing out on some revenues. But at the same time, I caution those sellers and say, you need to be careful, because there's nothing that says that a state couldn't subsequently come back to you and say, hey, you should have been collecting our tax. So that's just something I would caution you of. And again, I'm sure Holly does that when she has conversations with you as well, just to make sure, again, you understand where the potential liabilities could exist.
Right. And do you think that's when changes will be made, when those non-member states start pursuing audits of these remote sellers and tries to impose tax on them, that's when it'll elevate to another big case?
Yeah, I mean, I do think that that's what's going to happen. I mean, there have been various articles, and many people are probably familiar with some of them, where there's some groups that are out there that are really, I'm going to say, almost looking for the next case. And like I say, I think they're looking at it from an undue burden perspective, and that's where it'll, could ultimately lead to another, Wayfair type case coming forward. But in the meantime, Congress is still, and we still have we still have boots on the ground in Washington, D.C., keeping an eye on what's happening with respect to Congress and what actions they are or are not considering. And I've made a number of trips there and met with legislators and members of Congress and their staff, and we continue to be a resource for them in explaining what our member states are doing and things like that. But at this point, I don't think that there's really, I mean, obviously there's a lot bigger things going on right now than this. So I think that that's taken a lot of the oxygen out of what's available for an issue like this to move forward. I was, just before the pandemic struck, I actually was scheduled to testify at a Senate Finance Committee hearing that ended up getting canceled, specifically with respect to the Wayfair decision, kind of as a check-in to see what's happening, what our states have done, what difficulties sellers have been facing, what we've been doing to try to help and things like that. And for any of you that are using Streamlined, we actually are in the process of doing a survey right now of all the sellers that are registered through Streamlined to get additional input. And we certainly want to hear from them, and any additional suggestions for simplification and uniformity. We are definitely interested in getting that information.
Awesome.
So let's move on and talk a little bit about remote sellers. And this just a couple slides and just kind of some information that we have available to help folks. And these are kind of the things that remote sellers, and if you're a remote seller, you need to really be asking yourself to determine whether or not you have some liability in other states or some collection and reporting obligations. So, I think you really need to ask yourself, am I shipping my products into states that I'm not registered? And shipping can be tangible products. It can be delivering products electronically. All of those types of things can lead to economic nexus in a state. And if you are doing that, then you need to say, okay, have I exceeded those states' economic nexus laws and the thresholds that they've enacted? And if I have exceeded the threshold, or maybe it's, how do you calculate the threshold? Unfortunately, the states are not uniform in what their thresholds are and how they're calculated. Some states use, and many states, I should say, use 200 transactions, $100,000 in sales. If you exceed either one, you have to collect. I will tell you, states are thinking about and looking twice at the number of transaction thresholds, because when you think about somebody that's, let's just say they're selling T-shirts, and they sell 200 T-shirts into a state at 20 bucks a pop, you're talking $4,000 in gross sales, right? And the question is, do the states really want to have those sellers have to register, collect, and remit tax and file returns and all that? So some states are looking at that. But then when you get into the dollar thresholds, you need to look closely at the state's requirements on whether they're calculating it based on your gross sales, your taxable sales, your retail sales, how exactly are they calculating, and for what period of time. Most states look at a calendar year basis, either previous and or current calendar year. Some states, though, do a rolling 12-month period. Some states do a rolling 4 quarters. And that's something that I think and would certainly encourage, if states are looking at trying to make this easier, to come up with some uniform provision to say economic nexus should be, if you're going to use a transaction, it's at least this many transactions or at least this dollar level of sales. And I think probably the easiest way for a seller to calculate it is based on a gross sales number. Maybe it needs to be higher than 100,000. Maybe it needs to be 250,000 or 500,000 of gross sales as opposed to just taxable sales. But then once you figure out what the thresholds are in that, then the question is, do you have to collect the tax on those transactions? Is what you are doing even subject to tax in that state, or is the product that you're selling taxable in that state? So those are kind of to me the important questions for remote sellers to consider. And we've got, as you can see on the screen, this is just a screenshot of our website, our homepage. I mean, so if you jump out to it, we're at streamlinedssalestax.org. If you jump out to that page, this is what you'll see. And then across the top, the information about the About Us, the committees, the business, 4 businesses, 4 states. The 4 businesses tab has got information I think is very helpful to obviously to the remote sellers, but really to any business. And under that remote sellers tab, one of the things that you can go to is information for remote sellers. And we put out the guidelines that all of the states, and we've done this not just for our member states, but all states. We've contacted every one of them, provided links to all of their remote seller information that they put out. And we've actually tried to put it into a simple chart format that looks like this. Again, this is just a snippet from it. But the states and every one of the like Alabama and the words remote seller and the press release, all those are hyperlinks. It'll get you directly to the state's website and their contact information and who to reach out to. But this just provides a summary of what each of the states has. And again, even just looking at this, you can see that the dollar thresholds are different. How they calculate it is different. You look at Colorado, they only look at the past calendar year. You look at California, they look at the preceding or current calendar year. You look at Arizona, they look at annual gross retail sales. And you look at Colorado, they look at taxable sales. So those are all the nuances that remote sellers in particular have to deal with. And we tried to get it into I'm going to call it into a simple chart that people can scroll through and then provide the links if they want to go look at more information for one state versus another. So hopefully we'll find it, and we have gotten comments. I mean, people find it very useful to have it in that type of a format. And again, from the Streamlined Sales Tax Governing Board, I mean, we don't charge for any of this. This is all anybody wants to go to our website, they can get this information. So I would certainly encourage you to use this. So last thing I want to talk about, and we'll try to get wrapped up here, Holly, it's just kind of our our goals for for 2020 and beyond. And obviously, again, the whole pandemic has really thrown a wrench into our plans as well as other plans. But some of the things that we're working on and that we need to do a better job of is really preparing and disseminating more information to remote sellers. Help them better understand their collection and remittance obligations, in what I'd refer to as the whole post-Wayfair world. And, I certainly appreciate, like the work that you're doing, Holly, on this and others. And, we're going to include working with, the states themselves. Obviously, they need to get the information out, the retail associations, and business organizations. And we're going to continue to push forward with that because, again, we don't want businesses to be in a gotcha type situation where they just weren't aware of it. And again, there's no benefit to a state, reaching out to a business and, saying, oh, you owe us X number of dollars for all these years back, and all of a sudden that business is it's no longer a viable operation. We want the businesses to be there. I always think of it, and Holly, you and I have talked about it. I look at a business, every business that you can keep going is an annuity that you create for your state. They're collecting sales tax, they're hiring employees, they're paying income tax, all of those types of things. So it helps the economy, and make it as easy as possible. I mean, I want businesses to go like crazy. I want them to make as much money as they possibly can. And because the way I look at it is the more successful they are, obviously from a state perspective, the more revenue that they're going to be generating for the state and the state's economy and things like that. It's just kind of a snowball going down the hill and growing, the more successful that you can make them.
Right, and compliance goes right hand in hand with that, because the more easy it is to comply, the less it costs the states to bring in that revenue. So
Absolutely, absolutely. I mean, if you had 100% voluntary compliance, I mean, not having to go out and conduct audits and things like that, I mean, that would save the state significant amounts of revenue, or expense, I should say. So yeah, voluntary compliance is extremely important. Something else that we're looking at doing, and in January of this year, we passed a resolution in that to encourage non-member states to participate along with us. We know that Streamline's got a lot of requirements that a state has to meet before they can actually join us as a member state. So what we wanted to do was to let states take advantage of all of the pieces that they can, or as many of the pieces as they can, with respect to our organization and what we put together to help the business community, help the multi-state businesses be able to more easily comply with various states' laws. So we want them to participate as non-member states in our central registration system. We want them to offer CSP services. Our CSPs, even though they're certified in our 24 member states, they can still do the tax calculations and remittances and file returns for every one of the states that has a sales tax. So they can still do it. The difference is you as a seller pay for it, as opposed to having the state compensating the CSPs for them. So we are certainly going to be out there pushing that, and trying to encourage more of the non-member states to participate with us. And lastly, I would say we want to hear from you and from the business community. What other simplifications and uniformity provisions are really, I'm going to say, holding your business back, causing you a lot of heartburn and things like that? And what would you find to be most helpful? If it's something that we could work out with our member states to try to reach some sort of uniformity. We've heard from some businesses that have said, it's not really even necessarily the uniformity. It's just knowing how states treat, whether it's certain industries or certain transactions, or certain topics. And to that end, we've developed what we call disclosed practices, where states have to disclose how they're treating certain things. And we put that right on our taxability matrix for each state to complete. So we're going to continue to look for those types of things, and again, certainly encourage people to reach out, and again, I want people to be aware of us, the resources that we offer, anything that we can do to help remote sellers in our member states, or if you have any issues with our member states from a remote sales tax perspective, don't hesitate to reach out. The worst case is that I'm going to say I can't help you with that, but I probably can get you to the right person in the state, and to be able to help you with that type of information. So I guess in closing, again, thank you very much, Holly, for having me and allowing me to participate with you. I know we went over time, but I certainly would, I could talk about this all day, as you can expect.
That's okay. I'm going to steal back control. And I want to thank you, and I got Craig's contact information up. If anyone has questions for him or wants to learn more about Streamlined sales tax, make sure you go to his website and check that out. And I hope you come back and talk to us again, and I appreciate you taking time out of your busy schedule for today. So thank you.
You're welcome. Glad to be here.
And if any of you listening have sales and use tax questions and would like to contact me or book time with me, you can do that by going to my website at salesandincomeTax.com. Next week, tune in. We have Tyler Klum, Special Agent in Charge with the Alcohol, Tobacco, and Excise Unit at the Wisconsin Department of Revenue, where we'll be talking about enforcement issues. And again, if you had to check off early, or anyone who wants to rewatch this episode for all of Craig's great information, go to my website, salesandincomeTax.com, and click on Watch Previous Episodes under my 10 on Tuesdays icon. And I will see you all next week. Have a good week. Thank you.